What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is January 15th of 2020. Well, folks, I hope you all are having a fantastic day wherever you are, and in today's video, we're going to be diving deeply into the market, taking a look at the last 24 to 48 hours, and seeing how many cryptocurrencies have gone up as much as 20, 30, 50, or 100%. And along with that as well, we're going to be taking a look across the board at some news in the cryptocurrency space, as well as taking a dive into traditional markets. It's going to be a really exciting episode, guys, so I hope you stay tuned for it right after our quick sponsor. Our sponsor for today's episode is TaxBit. The IRS recently released new forms in 2019 that require all taxpayers to attest to whether or not they traded cryptocurrencies, no matter if they made gains or losses. TaxBit automates your cryptocurrency taxes, enabling you to effortlessly track, calculate, and report your transactions. Easily connect your exchanges to securely sync your transactions and run them through TaxBit's tax engine. Generate your completed tax forms with a single click. Founded by tax attorneys and CPAs, TaxBit is the most trusted cryptocurrency tax solution. Get 10% off your tax plan today with a free trial using promo code DataDash. Alrighty, everyone, so let's go ahead and take a look across the board for the market. As we can see here, over the last 24 hours, the vast majority of cryptocurrencies are in the green here, many of them entering into double-digit territory to the upside. And most of the coins down here that are in the red here, actually a lot of them are ending up being stable coins. Now, there's something interesting to note here. You may notice that a lot of these stable coins are down 0.6, 0.7%, something in that kind of ball range. And the interesting thing here is that this showcases a very big shift in demand for stable coins to riskier positions or practically altcoin positions at the moment. You can see here the sheer difference here. And you tend to find this when you start to see these kind of double-digit moves here on altcoins across the board. The other fascinating thing to take away from this, guys, and why I did a video yesterday that it seems people have really liked is, talking about why Bitcoin and cryptocurrencies are back, is that these moves are not just small cap cryptocurrencies. These aren't, high risk, small plays in the crypto space. Some of these are massive cryptocurrencies like Dash, like Zcash, Ethereum Classic, Basic Attention Token. You can see across the board here, a lot of these are larger cryptocurrencies. We've got Bitcoin Cash up 15%, EOS trending up 13%, Binance Coin up 13%, Raven Coin up 12%. I could go down the list here. There's a lot of great cryptocurrencies moving higher now, and it seems as if the risk narrative is on right now. People are looking to build positions. The momentum kicked in over the last week, especially over the last 48 hours, and people are getting really eager to build their positions. Now, I just wanted to share with you guys, just in case, if you guys aren't already, again, I'm not telling you guys you have to, but I'd recommend if you guys want to keep up to date with me outside of the YouTube channel, to follow me on Twitter at Nicholas_Merton. I posted 2 tweets yesterday, and we'll talk about these as we go throughout the video. Just generally my excitement for the crypto market right now. This price movement is not something to just kind of brush off. This is definitely significant. We're finding a lot of bottoms across the board in altcoins compared to Bitcoin, or also in their USD pairs as well. Across the board for a lot of these altcoins, they're very significant. These are very significant levels coming back down to really a midpoint between the last cycle for cryptocurrencies. We had basically 2 altcoin run-ups in the last cycle where altcoins came from practically nothing to being, multi-billion-dollar cryptocurrencies. And a lot of them have started to rest off of their midpoint. So I'll talk about that as we go through some of these plays later on in the video. But I wanted to post this tweet. Again, I'm very excited about the energy we're seeing. And I also want to talk about the moves in BSV. BSV is obviously stolen the show here. I got to say to ignore it, honestly, guys. Again, I'm not going to tell you guys if you should trade or invest or not. Most of you can if you're, US fans, because the vast majority of exchanges do not trade BSV in the United States. But there are a few plays. But we'll talk about that later on. So let's just go ahead here. Let's talk about, obviously, the head of the market here, Bitcoin. Bitcoin is right now, as we speak, pressing up towards its previous highs from yesterday. It's looking like here on the hourly that it might continue to pop up and test towards 9,000, which is obviously a big even level here for Bitcoin. Now, again, I want to make sure to see what happens here at 9,000. But so long as we continue throwing this, guys, on the daily, we're looking good here. Again, possibly maybe even testing up back here towards the 10,000 range that we tested with the China news after President Xi made the comments on blockchain. And along with that as well, just taking a look here on the weekly time frame. Again, stepping back and looking at the longer term time frames. All 3 indicators are looking good. MACD cross very close on the weekly. Stochastic RSI looks like it still has a ton of room to breathe here as we held up here for a very long period back here between the first and second quarter of 2019. All 3 indicators are looking nice here. Again, nothing really negative to say. So long as we continue throwing the price action until we see that trend shift I'm not worried about it. But here's the important thing to talk about. When we're talking about, positioning ourselves in cryptocurrencies, it's not just a matter of being positioned in crypto. It's a question of, at this moment in time, is it better to be positioned in Bitcoin or altcoins? As a trader, that's really important to me, and it might be important to you as well. Well, the important thing to look at is whether or not Bitcoin dominance is trending to the upside or downside. And as I've stressed a lot on this channel, as much as I have wanted to wait until we got back up to the previous highs of the last cycle, because that's exactly when the altcoin cycle sparked last time around, when we actually got back here. I'll better explain this real quick. Oops, sorry, this is not the right version of BLX. If we take a look here at the Brave New Coin Liquid Bitcoin Index, the altcoin market trended in 2 periods of time. Here, when we revisited back to the highs here at around 1200, as we were setting our highs back here in 2014, and back here during the new all-time highs for Bitcoin at 20K back in the later part of December of 2017, stepping into January of 2018. Those were the 2 periods of time where we saw altcoins trending. And again, I wanted to wait for this period, but there were a lot of awesome, interesting opportunities, just like in the previous cycle, that started to pick up, such as Chainlink, Basic Attention Token, and a few other different altcoins out there. And we have started to see over the last 24 to 48 hours that it may not be a good idea just to simply wait around. And before we take a look at any specific cryptos, as I mentioned, you need not look any further than Bitcoin dominance. Take a look at this, guys. Over the last few days here, especially yesterday, the absolute immense drop here in Bitcoin dominance. We have broken through the level of support that was giving me confidence that Bitcoin might hold out and maintain its dominance. We have broken through, and now we're finally playing catch up with this trend that I've had marked this. I marked this on my chart for a long time. And again, I might have had a little bit of an eagerness here, and I want to keep it here just to show you guys for transparency's sake. I was a little bit eager on thinking that this would break as soon as I thought it would, but really, it looks like we're coming to play out here, and we're playing catch up. And it looks like we're going to come down here probably around to 58, 59%. So we might be getting an early altcoin run up here with Bitcoin ticking up as well. This isn't me being negative on Bitcoin. This doesn't mean Bitcoin has to go down in price. It just means that altcoins will likely be able to keep up with the momentum of Bitcoin going back to its all-time highs, and that a lot of key players are going to drastically outpace Bitcoin. What are those positions? Well, I can't tell you exactly what they are. I mean, who knows what they're going to be, but I do have some ideas of what plays might be good here going into the next cycle. And I've positioned myself in a lot of different cryptocurrencies. I've been positioned in them for a while, and even during this kind of the run-up we had in early 2019 and the downside in 2019 towards the later part of the year, we've been able to hold out pretty good. So let's go ahead and talk about some of those. So the first one here, obviously, we've talked about Chainlink. Chainlink held really critical support here. 2 key previous resistance levels now acting as support. And you'll see, guys, that again, what really matters here is looking at the longer term time frames and looking at support and resistance, basically naked trading. And don't worry, I'm clothed while I'm doing it, but you see what I'm saying. If you guys know what I'm talking about, naked trading is when you're looking for key support and resistance levels. I want to see Chainlink get above 29,000 sats here in the next couple of days, but so far it's holding the vast majority of its gains here. It's well above that support level, which is exactly what I want to see. So it's going up compared to Bitcoin here over the last few weeks. That's all good to me. And my target range for the next coming months are coming up here to 40,000 sats. That's what I want to see. And once we get past 40,000 sats, I think this is going to perform very similar to what Ethereum did back in the 2017 rally. So it's one of my top plays for the year. Along with this, well, I want to take a look at Basic Attention Token. I reallocated, or actually, I've actually had a position in Basic Attention Token for some time. We can see here that BAT has been picking up here. I'm looking for it to generally get above this range here around 2,700 sats. After that, it'll climb back up and retest towards 3,200. And then we've got these kind of longer term marks that we're looking for. These are where I'll start to take partial shares in my my positions. But I think it's going to take, like Chainlink getting to 40,000 sats, it's going to take a few months for us to get up there. Nonetheless, so long as it's growing compared to Bitcoin, that's what I'm anticipating. That's what I'm looking forward to. Now, I want to go ahead and talk a little bit about these kind of USD levels I was mentioning, about some of the key long-term crypto plays. These aren't ones particularly that I'm excited about. Some of them are, some of them are not. XRP, I think, is one that a lot of people watch If we take a look here on the weekly, you can see in a significant nature that we're holding towards a very consistent support range historically. Again, there was really 2 cycles during the altcoin market, 2 cycles for altcoins in the last bull run back in 2017. We had it back here in the first and second quarter of 2017, and we also had it going in here through December and January. And as we can see here, we've made support on that mid-range there, that middle area between the first cycle and the second cycle. And this is happening with a lot of cryptocurrencies. Again, ignore the question in a lot of cases of fundamentals with some of these plays, guys. It's a question of, did it make support on that area? And also, did it have a nice fundamental correction? One of these plays we can talk about is Dash. Take a look at its Bitcoin chart here. It did exactly that. If you want to take it off the logarithmic chart here, it held on a key level of support back here that historically it had held compared to Bitcoin for a long period of time. And along with that, if you take a look at the, we can take a look at the USD chart as well. Go ahead and take a look on Poloniex. You can see here, again, if we take a look at a logarithmic chart, holding generally around this range here that it's held support back here in the past. Again, not perfect all the time, but you can see here, generally speaking, that we're getting some significant price moves. These are not to be ignored. This is definitely serious volume across the board, and this is serious price action. Now we're taking a look at Poloniex, so the volume might not 100% be there. This is one of the less traded exchanges. But if you take a look across the board with like Binance, for example, right? We can see here volume pouring in significantly over the last few weeks. And now this is of course coming up with some fundamentals as well. Dash was one of our top 10 plays for the year. Dash has recently launched about 3 years of work through the work known as Evolution. Evolution has been a huge work in the making for Dash, and I'm excited to see it come to fruition. As you guys might know, I've been a big fan of Dash for their works in Venezuela and getting cryptocurrency out there to people who really need it, and I like the treasury model and a lot of aspects of it. Also a big fan of Energy as well. Energy has been kind of taking a lot of the success from Dash and Ethereum and kind of molding them together, but nonetheless, gotta say congrats to the Dash ecosystem, making up months of losses here and compared to Bitcoin, or also, excuse me, in dollar terms. So this is good to see. The last one I want to talk about that I recently built a position in, I've had this for a little while and stuff and just kind of stacked onto it, is Khyber. Now, Khyber Network has been one that I've known about for a long time. Khyber is one that I've talked about all the way back in 2017, and they have really been one of the leaders in the whole DeFi movement. It's one of the few ways you can actually kind of have an invested stake in the DeFi ecosystem through a crypto token. And Khyber has a really interesting staking model that they're integrating over this next year. They've got a lot of exciting things coming through as DeFi has been expanding out. Decentralized exchanges have been growing, and they've got Khyber Swap. Long story short, though, Khyber Network is one that I recommend you guys look into. I've been following it for a long time. Chart looks really good. I like these higher lows we've been setting all the way back since August of 2019. Not many cryptocurrencies have been setting those higher lows on a multi-month and multi-week basis. You can see here, we've been holding this trend for a while. If we take it to the monthly, it becomes even clearer here that we're starting to finally trend upwards. So this is what gets me really excited. I like this multi-month trend. If we continue this up, it's going to start picking up momentum, and we've got a lot of ground to regain here, I think, compared to Bitcoin, with a lot of the excitement for the DeFi space. All right. So these are some of the things that I'm interested in. I know we spent a lot of time looking at the market, and I probably sound like I'm almost out of breath, so I'm going to take a real quick drink of some yerba mate. All right. So let's go ahead and run through some of the news here. Again, we talked about some of these kind of price moves, guys, and I want to go ahead and spend some time to just really, talk about an important question. Are we really setting up for, the next altcoin cycle? Are we, entering in? It's interesting. A lot of people say, are we in the next bull market? It really depends on what you label and define as a bull market. For me, I call this the exit out of the accumulation phase, and this is until we reach back up to 20,000, we're in the exit out of the accumulation phase. The good news for that is that there's plenty of room to grow. If Bitcoin's sitting at around, nearly a little bit under 9,000, we've still got a lot of room to go. We've got pretty much 11,000, which would be more than a double on Bitcoin to get back up to the highs of 20,000. I consider a full-on bull market when we're at 20K, breaking through 20,000 and going towards new all-time highs. And as we've talked about on the channel, I believe we're going to be somewhere in the target range of around 80 to 100,000. We're going to see a pretty exponential run up here, as we've seen in the past for Bitcoin, after the halving has gone into effect in May of 2020. And we also have, again, a new wave of retail institutional adoption, more people becoming aware of cryptocurrencies and building positions, and also making cryptocurrencies more useful in day-to-day life. As you guys might know, I'm working on my startup right now in the cryptocurrency space. If you guys want to keep up to date with that, there's a link down below, Banking for the 21st Century. Definitely fill out with your email in there. I'm not going to spam you guys. That's just the startup I'm working on right now. But there's a lot of interesting things coming in the pipeline, guys. Not just with my startup, but with a lot of really interesting companies and projects in the crypto space. Now, I want to go ahead and talk about some of these price moves. There's been a lot of speculative run-up here with BSV, or Bitcoin Satoshi's vision, which is one of the forks of Bitcoin. And guys, I'll be fair here. It's funny because I'm actually one of the few people who's interested to see the utility and technical application of the BSV blockchain, because I gotta be honest, they've patented a lot of interesting tech, but I don't like Craig Wright, and I don't really care for how they market BSV. And not to mention, there's been this huge court case going on with Bitcoin SV that you guys might have heard about over the last few months, where Craig is claiming that through a third party, they've been able to gain access to over $9.6 billion of Bitcoin in a fund or a trust known as the Tulip Trust. And again, I don't want to spend much time to dive into this, but the whole speculation as to why BSV is running up supposedly is because Craig has ownership of these keys and that he's going to probably dump all his Bitcoin and, you know, prop up BSV in this case with the money that he makes selling his Bitcoin. I really don't believe this to be the case. There's been no proof. There's been continued delay of actually exposing these keys and stuff from what I've seen. And again, I know some people out there are fans of BSV. I don't really care. I'm really waiting until the show actually showcases itself. Right? I'm waiting until Craig actually does this, if he actually has the keys. But taking a look at BSV here in this case, guys, the thing I tweeted about the other day is that I don't really care about this price action that we saw, because quite frankly, even though this is pretty exponential price action, and in this case, if you bought back here, you could have tripled your Bitcoin, most US traders probably don't have access to BSV if they're trading on exchanges outside of Bittrex. And along with that, the vast majority of volume is on a lot of exchanges that are known for wash trading, or just simply exchanges that you can't get access to or that don't have real volume on it. And that basically allows, for those who don't know what wash trading is, it's basically meaning that on the exchange, one account can trade on both sides. It's usually the market makers who are doing this. It's actually an illegal practice, but the main thing to take away is that because there's a reason it's illegal. It's because they can actually determine the price of an asset. If you're buying and selling between the same accounts or the same individual, you can stimulate a fake rally in an asset in this case, because you're buying and selling to yourself. If I can buy something for $1 and sell it to myself for $1.10, then I just made something go up 10%. And they basically do this to build artificial rallies. And then once the asset is high up, they start to sell it and dump it on investors, in this case, who have actually deposited their money on the exchanges. So it's an important thing to take into mind here when we're considering this. All right, so let's go ahead and talk a little bit about traditional markets. As we talked a little bit about yesterday, I think we're in the last hoorah rally for equities across the board, especially in the tech stocks. With the NASDAQ sitting around 9,000, it's very likely that over the next few weeks, we could test up to 10,000 points, which would be double the value of the dot-com bubble. And that's an important point that I want to stress here. I think that this rally that we've seen over the last decade in equities, where we've really seen the overextension in equities versus properties back in 2008, I see much more similarities with the current rally we've had to the dot-com bubble rather than the bubble in 2008. And the reason I say that is because a lot of the same methods that drove the stock market higher, the rampant speculation, but along with that, the stock buybacks and the excessive dividends, have actually come into tech stocks. And we're seeing a lot of similarities in that sense of what led the market higher. So these are two good charts that we could take a look at. We're at near record proportions of IPOs losing money, and this is a sign of the stock market being in trouble. There's a lot of companies overvalued, coming out at ridiculous valuations that are burning through cash. And we can see historically, look at how similar these line up here. This is back during the dot-com bubble during the 90s, with a ton of IPOs, the vast majority of which are not making money. Same exact case scenario here. We've seen growth here with more risk taking as the equity market has moved higher. The environment becomes more fruitious for companies to IPO and exit. And a lot of them haven't focused on profitability. They've really focused over the last decade on just getting users. And we can see here that, again, we're seeing that same exact peak out here, with possibly a very quick short-term correction in this case, where companies either have to focus on profitability or in many cases, a lot of investors get burned, right? Eventually, you need to have cash flow coming into your company. Along with that as well, The largest cap stocks are taking up the vast majority of the S&P 500 in market cap. Take a look at this, guys. Further than where we were back in 1999, right? Around 16.5%, now up to 18%, right? The top 5 firms of the S&P 500 swallowing all of the market dominance here in the sense of the S&P 500 or the market capitalization. And this has been coming through, as we talked about yesterday. With this NASDAQ rally, a lot of it has come through on some of the major tech plays like Apple, along with that as well, Microsoft. These companies are adding, since October of 2019, they've added hundreds of billions of dollars of market capitalization with not much difference in earnings or fundamentals or exciting new functions or features in their software or new product lines. There's no reason for it. It's just simply because there's been stock buybacks. The Fed has been pumping in easy money that's not QE, basically what's known as its repo operations. And interestingly enough, we're seeing those stock buybacks start to decline quarter by quarter. We're starting to see the Fed repo operations decline as well. Well, what do you think is going to happen to equities when all that ends? What happens when the funny money starts to flow out and we stop getting the inflows into equity markets that continue to prop up valuations and asset prices? Well, you get the opposite effect. And what we're watching right now is to see whether or not we start to get that trend reversal early on. I honestly think right now, with futures only being down 0.2%, across most major indices, I think we've got another few weeks of upside price action, guys. As much as I've been bearish on equities since back here, I'll be completely honest with you for those of you who might have kept up or maybe who haven't kept up with the channel. I've been bearish on equities since back here around 76 to 7,500 on the NASDAQ. And to be fair, equities have continued to rally. I thought we were going to get a recession back here. And we did have a nice pullback. We did call a pretty good correction here, but it wasn't the final pullback in this case to enter into a 50% correction. We got about a 30% correction. I think we're going to get that at 10,000. I'll be completely fair. I think we're going to get it at 10,000. I mean, just take a look at the chart here, guys. All right, we topped out back here around a little bit below 5,000 here for the NASDAQ. What's to say that we won't top out again at double the valuation of a crazy rally, the most crazy rally we'd ever seen in equities, especially for tech stocks, with the same kind of overvalued rampant speculation across the board. I think somewhere between a double 4,800 in this case, so around 9,600, up to 10,000 is where the game ends. So you've got a little bit more risk taking that you can have here for equities. You could try to trade this last little, again, rally here, this last little hoorah, as I like to put it. But I'm more well positioned in cryptocurrencies because, quite frankly, to me, the potential returns are not worth the potential risk. For me, I see the cryptocurrencies, like Bitcoin. Take a look at total market cap here for cryptocurrencies, right? We're at a pretty cheap range. There's not many asset classes that have pulled back this much from their recent relative highs and have the kind of room that cryptocurrencies have to grow. It's a new emerging asset class. And outside of that, I'm a little bit interested in gold and silver, but mostly cryptocurrencies. All right. Well, I'll let you guys know if I make any changes into my positions or, get eager about any other market. That being said, though, I hope you guys enjoyed this video. If you liked it, drop a like. And for those of you who might be coming back and stuff, if you're not getting notifications for the videos, I've heard some people complain about this. If you aren't getting notifications for it, hit the bell icon that's down below near the subscribe button. That'll make sure that you guys get alerts to the channel. If you can't find it there, it's on the channel as well. But that bell icon will make sure you guys get notified on every single video that I put out, so you guys can keep up to date. I don't know why YouTube's subscription model doesn't work anymore. They've changed that over the last few years. But I definitely want to make sure you guys can stay up to date on the market. If you guys want to support me on my startup or keep up to date on it, definitely check out the link down below. And again, let me know down below in the comments and stuff what you think about all this, guys. Are you excited about crypto markets? What are you watching outside of crypto markets? I know cannabis markets are looking quite exciting as well. Starting to get some positive price action. Could we be seeing a bottom there? If you guys want me to talk about that as well, leave a comment down below. All right, I've rambled on enough, guys. It's been a long episode. Thank you all so much for staying tuned, and I'll see you all in the next video. Stay tuned.